Hello, traders. It's E from MarketWizards.com. About 11:30 on Saturday, the 30th of March 2024. Reminding traders to use risk capital you can afford to lose. All right, I'm going to do a review of some of the ideas that I have posted and observed in the recent month, just as a monthly review. And we'll mix in the E-mini S&P with the NQ. I think they're both relevant for day traders, so might as well start there. Pattern recognition is very important to me, but it's not the only thing. Patterns can get broken, and you need to understand when they get broken. So for me, this big W just jumped out at me. And at the time when this was posted, which was the 25th of February, I could see this. It just jumped out because I see it. I look for it in day trading ideas in smaller time frames. And this jumped out at me, and I said, "Okay, this is going to take off. This is a long side trade. We have held support. We've made the double bottom in here, tail here. You can't get back down to take it out. So that's support until we break it." And then I subsequently want to have important aggressive areas too and retest zones. And if we fail, we're going to fail back here. So far, so good. So that was identified because I know the trajectory of this is up. And it's going to be an arm. This is the arm of the spider reaching up. And I've talked about that before. And this is the NQ. And this is currently more neutral, I believed. I can still see my W's. Support zone. Reversal if we got back under here. Aggressive pivot areas. Double top. This one is not taken off yet, right? I'm seeing that as a double top. So more neutral at the time with NQ. Back to the E-mini S&P. And clearly we can see this as an important idea because if this holds, this could become a head shoulder stop. Come back and do retests. So this is identified as an area that needs to hold on any subsequent retest failure ideas. And I already know certain things about the market and pivots, and this is just a basic schematic of points, but it's not the system pivots. And a couple of days later, 28th, still have the ideas identified, important support, retest zones, right? The big W, holding, sideways base, perhaps building. We don't know until hindsight. But identified our supports, aggressive supports, retest areas, so you know when you're wrong. And of course, in a move like this, traders are going to start to guess. Don't forget rollover coming and so on. And we can see, obviously, same timing, what we're looking at with the NQ. The double top still in place. Aggressive support pivot intact. Longer term averages supportive until broken. Okay, the rain line. Obviously the sigmas. So again, you can kind of see this sideways channel that base on base being built. And we need to hold support, obviously. And now this is the 1st of March. And we get at the beginning of March the push. Pivot support still here. Double top is now broken, 3rd time through. This is identified. I've got my support identified. This is a system pivot. And we know that we are currently in a breakout. Already identified, reversal territory identified, support zones, aggressive. And now the double top is negated. Potentially, we could get a turtle trap and a reversal. But for now, that's support. And we do have identified the breakout. Same day, beginning of March. And we've got the E-mini in the spider pattern, holding the retest, squeezing up. Targets were identified, paid for sure. Now, some of these ideas will be for day traders, some obviously for swing and position traders. Anybody that's got several accounts may have a position account where long-term you've got ETFs, stocks, whatever, and then maybe trading futures as a day trading idea. Many different styles of trading. Follow through. This is the 2nd of March, and we get follow through. We can still see the same things we've talked about. Clearly, the breakout now can be seen. We get a nasty sell-off now, and this is the 7th of March, and we get a nasty sell-off coming back in, retesting support. We break the support at 0775. We come back in and we are testing the lows back here. This 812.50 pivot is still intact. We get another little W right here, and then we come back up in the retest failure leg. Will it fail or not? Nobody knows. But we still know the pattern that we are talking about. And now a bit later to the 19th, where we obviously have had a nice run, still sideways, double top was broken. And now we have to factor in things like rollover. Obviously, as position players enter new contracts, which causes some volatility. We still know where our failure level is. We cannot hold. This is like a beach ball being pushed down, cannot break this 1807.75 area, and we get a bounce back up, and we are holding. Meanwhile, we already know that this could potentially be a head and shoulders top. But no guarantee. Nobody knows. Could just be a squared off, a rectangle. All we know is this rain line, this area needs to hold if we're going to go back up. If not, we're coming back down here to test these levels that are aggressive pivots and aggressive support. And here we have the E-mini S&P. Pattern was identified with a W, support. We ride the slope line, this blue line. This is a little bit deeper chart. We can see where we came over the crossover, and then this blue line, we've gotten pretty stretched from the rain line. These have been system pivots, and you can see with the system, we have banged into that 312 right now, and currently you've got to get above that to get to the next pivot. 234 support pivot. And the market knows and understands market structure. Even though you don't, the market does. And the market has ideas that you have not even considered, probably, unless you're a student of the game. So this pattern identified, spider pattern, bullish, has turned out to be very true for the month of March. And the NQ, which we had said was not as strong evidently as the E-mini S&P, that has also proven to be true, where we've gone mostly sideways, building potentially a base on base. Was not able to stay under the failure line, pushed up, but we still have not been able to substantially break out at next level either. So sideways and obviously a little bit more neutral as we had postulated. So doing a review like this is important to be honest with yourself with what you're seeing and the patterns that you see, and then obviously to help see things for the future, to continually review our own work. In my opinion, it's more important to do my own work and to double check my ideas than it is just to listen to gurus and experts try to tell me what is what. Now, I follow people like David Hunter, and I've listened to one of his latest broadcasts, and I see his targets. I understand where he's getting them. My own work shows me that I concur with the target, but will it get there? Nobody knows, and then what time frame? So for me, I already know how to achieve those locations, but the question is, how much risk are you willing to take to get there, and in what time frame? So day traders typically are going to close out at the end of the day. Your position accounts, however, you can let run until you see something that tells you, wait a minute, I don't like what I see. I'm going to the sidelines. So quick review, going back to the first of the year, we had that nasty sell-off, and then we held and we started to reverse, and we took off from there and started to bounce. And then all of these things we've talked about today can be put into perspective to see the pattern as it emerges. And here we are coming into the beginning of the month. And this is a 240 chart. So I'm already aware of where I want markets to hold or to attempt to get to. And this is going to be another area, obviously, of importance, especially at this 750. So that's a biggie that we need to pay attention to. And looking at the E-mini S&P to wrap things up, I remember very clearly in October, some perma bears said, no, we're in a bear market. We're going down. I've been able to make a lot of money on the short side since August. I said, well, I think we're going up. I don't argue with people, and I don't fault them if they're wrong way Charlie. We're all wrong way Charlie at times. I just try to trade what I see, trade the patterns that I believe in, and we'll try to use objective criteria rather than arguing with the market or people. It doesn't matter. So the first thing that you want to do is understand recency bias. And so that recency bias clouded that trader's mind about where we were heading. And now the same thing is possible as we, move higher. That there's some point where you're too stretched and you need a pullback. It's healthy. So looking at this chart and trying to put it into a little bit more perspective, we use a 16-day idea because really that's all you need for the next couple of weeks, a 16-day idea. And if we break this area, which is our primary pivot. Then we know that 332 is next. And we know 351 is next after that. And for now, we know that 234 is the middle pivot that needs to hold. And if that breaks, then any of these lines become in question. So this is your major pivot supporting us right now until broken. And if we break that, then these two levels are going to become important. So it's a methodology. It's a system that we use. It's time tested. It's objective. We never know when we get an outlier day, but if we do, we already know where the target levels are, one way or the other. And we constantly adjust this as the market gives us new information. I'm enjoying this class that I'm teaching now. This will end in a week. For those of you who have joined me, I'm extremely grateful. For those that continue to think that this is all nonsense and the stuff I post doesn't make sense, I get that. You know, we're all entitled to our opinion. It's not going to help everybody. With those who have a strong bias that their system is the only way, I get it. You know, if you're having success with it, why would you change? I wouldn't change either. I love what I'm doing. I love helping other traders. I love teaching. I love giving them what I believe are the keys to the market that we want to be able to use day in and day out in many different time frames and to understand what's happening. It's a risky business, there's no doubt. It takes capital, takes psychology, being able to have emotional control. It takes understanding the odds and probability. I put this on my website because I believe in helping others. Was an educator for many, many years and continue to do so instead of rusting out and hanging out at the beach every day or playing golf every day. I like giving back too, and I love what I'm doing here. Anything I can do to help you, reach out. Me at emonywizard.com. Hoping that you have a wonderful weekend. Thanks for listening.